in the world. He's worked in the West Bank and Gaza. He's worked in Iraq. Um, he has supported the Office for the Quartet, working on the Middle East peace process. In addition, he has worked for the GCC countries, that's the Gulf Coordination Council countries, Malaysia, Bolivia, and now, as I said, Sri Lanka, Nepal, and Maldives. So what I'm going to start off, I think all of us in South Asia, what's on the top of our mind is this resurgence of the pandemic. Um, in addition to the terrible situation in India, other countries in South Asia are also seeing a surge in the number of infections and also hospitalizations. Um, and I'd like at the beginning to ask Faris what the World Bank has been doing to save lives and livelihoods, and also what it is in a position to do in terms of coping with this next round of infections.
Thank you. Thank you very much, Dr. Kumaraswamy, and thanks to all who have attended this meeting. Indeed, it's a pleasure for me to be with you here today. As you know, Dr. Kum, I was in Sri Lanka until about 5 days ago, and then traveled to the Maldives and rushed back to Nepal and arrived yesterday, 2 days before the lockdown. It's very clear, and it's very unfortunate to say that I think this wave, whether it's second, third, or fourth, that has hit India so tragically and so powerfully, is actually moving in lockstep across the countries. In the case of Nepal, we're seeing almost a symmetric sort of increase in the rates. Hospitals and facilities are quickly getting overwhelmed, and we're seeing patterns across the region. So this is the time for us all jointly and severally, I think, to show extreme caution in our social interactions. I am no physician and I don't claim to be as such, but what I understand is that from others who are more qualified than I, is that the vaccine is very important. However, the vaccine may not, whereas it will shield that person, it will not shield others from being infected. So even a person who is vaccinated is going to have an issue in infecting others. So I hope everybody will exercise extreme caution and wish us all the best. In terms of what the bank is doing, World Bank Group is doing, I should say. I have to say, one would expect me to say this, but I genuinely am tremendously proud of what the World Bank is doing and the World Bank teams are doing on the ground and in support of our client countries. And of course, we are members of the international community, so other agencies are also doing equally great work. And I think the development partners, this is one of these things where, needless to say, I think we're all in it together. No country is spared, no country is immune. So there's a sense of camaraderie, fraternity, and partnership. The World Bank, since the inception of the disease, we've put together specifically just for COVID vaccines and the type around $12 billion. This is in addition to 140 billion that was used for economic reforms to help with the recovery, but specifically for vaccines and for other equipment, including treatment equipment made available globally, $12 billion to help. I'm very happy to say that in the occasion of this meeting, I'm happy to announce, and yesterday there was an agreement by the World Bank senior management to also make available $81 million for Sri Lanka to help with vaccine acquisition along with other supplies. So I'm very happy that is moving forward. So these are the types of things that we are doing, of course, in all the countries that need it. And of course, everything is subject to availability of vaccines and et cetera, but all of us are working very closely together, including with the government of Sri Lanka, to make this available. So let us hope for the best. Now, as I said, I was even boarding the plane, even a couple of weeks, Dr. Kuman, you and I were talking and sort of brainstorming. It's really devastating and interesting that we were talking about things that, questions, what are the likely questions, et cetera. And I had begun thinking what are the issues, and I put on some notes, put some notes on sort of a summary I was going to talk about the prospects for the region. I had to erase those notes today, or actually trash those notes and write a whole new set of notes, because in 2 weeks, things have changed so dramatically. And this is in and of itself the crux of the situation we're facing now. A couple of weeks ago, about 3-4 weeks ago, we issued our South Asia Economic Focus, which is our analytical work on prospects. And I'm still hoping this will pan out. But, you know, with this latest strain on what's happening in India, this is likely to change. A few weeks ago, we were projecting that a considerable recovery in South Asia specifically. And the numbers we were projecting was 7.2% growth in GDP this coming year in South Asia, and then 4.4% in 2022. This, of course, comes at the tail of historic lows in 2020, which we've all seen. And we started seeing a recovery. So that was very, very promising. We started seeing a recovery that actually started even in the third and fourth quarter of 2021, which was very promising. But we had started at seeing some structural unevenness in how growth was happening. And we were already starting to see that whereas there was recovery, activity was well below the pre-COVID era, which is natural, because let's remember, firms, you know, even in a situation of recovery, firms still need to make up for losses. Millions of workers, mostly those in the informal sectors, have to pick up their lives again. And human capital gaps are ones whose impact is going to be felt for a long time. So until the recent spike that we saw a couple of weeks ago, we saw that the region was set to regain its growth momentum, led by India, actually, which was supposed to grow, estimated around 10%. And we could see in certain indicators, electricity consumption, mobility data, et cetera, that there was a spike. And one has to give credit to all countries, Sri Lanka, India, all the countries in the region, because this is such an unprecedented shock, a tsunami, if you will, something that we hadn't thought of. But in a span of a year, countries have responded and learned to respond in terms of increasing testing, enhancing medical capacity, beginning to administer the vaccination program and things of that sort. Also on central banks across the region, and Sri Lanka is no exception, used accommodative monetary policy in a meaningful way. And that was necessary, enhancing liquidity, things of that sort. And fiscal stimulus, particularly cash transfers to those who need it, were very, very important in mitigating this thing. So now we're moving to the future, And again, I'm a bit tentative as I speak about this, because 2 weeks ago, I would have spoken to you with much more confidence. We were in the recovery mode. Now we have to sit and wait and see what
Ishan
happens.
also needs to connect.
Sorry, yeah. I hope, yeah, if colleagues can mute, yeah. So are you still there? Yes.
Yeah, sorry.
So, I would have spoken with more confidence, but let's hope that this will be controlled, and we have to hope for the best for India and for all of our countries. Is we continue to keep our eye on the prize, I think, in a regional perspective, and then I'm sure we'll drill down into Sri Lanka and elsewhere. Things that emerged in these countries were as a result of COVID-19 and the impact therein. Nevertheless, there was a surfacing of structural issues in each of the countries. So in many ways, it laid bare some of the structural issues that hitherto had existed, certainly since both financial crises, or even before in some cases, but had not surfaced, and now they surface. So the question is, as we build back, and inevitably we shall build back, how do we build back better? How do we build back greener? And this issue, talking about what are the lessons we have learned as a region and individually as countries in terms of the structure of our social transfer system, our social protection systems. What have we learned about the importance of universal social insurance, for instance? That's one. What are the things we can do regionally as regional cooperation being very important, not only in terms of trade, customs across borders, which showed its strength and weaknesses during this COVID thing, but regional issues that we can address together. For instance, a regional pandemic surveillance system, exchanging data. That is an opportunity. Trade constraints, investments in human capital at the individual country level, these 2 years and the impacts on human capital of these last 2 years. And I know online digital platforms have been a savior and will continue to be a savior, but there have been impacts, and this has led to digital divides between the haves and have-nots. How do we address those issues? And of course, macro fiscal and debt vulnerabilities that already existed and have come to the surface. So these are the things that with this challenge, we have opportunities as a region and individually to address as we move forward. Over to you, Dr. Kumar. I'm happy to go into Sri Lanka if you wish, but I want to give you a
Great,
chance.
thank you very much. I mean, in a sense, I guess the whole world is in a race, in the midst of a race between vaccination on the one hand and mutation of the virus on the other. So far, touch wood, it seems we have not come across a mutated variant, which seems to be fundamentally undermining the efficaciousness of the vaccines that we have. And hopefully we can move quickly enough to make sure that situation persists. Now, thank you very much. I mean, you've given us a very good kind of readout on what is happening in the region and some of the challenges that have been faced by the countries and the way they've actually responded. Finance ministries and central banks have been very aggressive, and South Asia has been no different from other parts of the world. And as you said, reading the South Asia Economic Survey of the World Bank, reading the World Economic Outlook of the IMF for the spring meetings, things were looking pretty optimistic for South Asia and for the rest of the world. Now, from a Sri Lankan perspective, before we get on to the Sri Lankan economy, if we look at its external landscape, its key markets in the US and Europe, on the one hand, and also in terms of its import bill, the commodity price cycle. I mean, people are talking about a super cycle in terms of commodity prices, again, not just oil, but other commodities as well. So both in terms of Sri Lanka's key markets and in terms of its the prices of some of its key exports, how do you see that playing itself out? Particularly because Sri Lanka is confronted with a very challenging external payments environment at the moment.
Yeah, thank you. If you'll allow me, just maybe, and it's how my brain works, and forgive me for that. I'm more of a story guy, so I'd like to lay out the narrative a little bit because it helps me also clean it up in my mind and think about it. I mean, needless to say, and I'm sure you would agree with me on this, Dr. Kumaraswamy, that if the COVID situation has taught us anything, it has taught us to be humble in the face of what will happen in the future. And one cannot predict this. I think we will need 3 economists, 2 epidemiologists, and a soothsayer to make that happen.
We still wouldn't get the answers, yeah.
Exactly. But if I can just lay out the narrative and how we see our assessment of the Sri Lankan economy over the past year. You've seen, of course, no need to go through the numbers and the data, but you've seen that in our estimates. The impact obviously has been devastating devastating in 2020 with a drop in 3.6% last year, the worst on record, of course, led by tourism and construction, transport and textiles, etc. We were expecting, and we're still expecting, a recovery in 2021, which is interestingly driven by foreign investment and normalizing tourism. And I myself started seeing it when I was arriving there. So, and that started again, actually, in the third, even third, but mostly fourth quarter of last fiscal year. So, and again, one has to give credit to swift actions, government actions, in terms of, I said, that despite the limited fiscal space on social transfers, health spending increased, delayed taxation, all of this contributed. That delta itself was about less than 1%, about 0.7%, but it was still significant. And of course, with the monetary easing, and you had a benign sort of inflationary environment and things of that sort. That's that's what we've seen. On the other hand, the global recovery, I mean, this isn't something that hit Sri Lanka alone, but there was a global sort of malaise and slow global, recession and global recovery. And what we saw even as continued scarring from the slowdown that was weighing down quite a bit on the outlook. Now, you also have high debt, which is a big issue that also still weighs down on the outlook, not only in Sri Lanka, but many other countries. I mean, this is not unique there. Now, needless to say, and at the expense of oversimplifying it, forgive me, but what we've seen is also, it's quite simple. When outflows increase beyond inflows, and then we can decompose the outflows and the inflows, you see that reserves have gone down, and reserves are an issue to look at. Now, we saw an improved trade balance there and remittances. So that increase in remittances, not only in Sri Lanka, by the way, but in Nepal, elsewhere, helped that current account quite a bit. And now, in terms of the outflows, the fact, the fact that there were so many debt payments, and this is not, the debt issue is not something that happened now, a year ago. This has been an accumulation over the years, and something that done before in the absence of COVID. So there was no predictive capacity. Nevertheless, this has had a bearing in terms of the outflows and has actually lowered the foreign exchange reserves to an amount not seen for a while. So this is one issue. Now, naturally, the fiscal deficit also, so we're looking at now, maybe we're veering into a conversation on the twin deficits, but so that's a situation that existed and now has been exacerbated. Now, government, if I may say so, has actually been quite responsible in the sense that recent debt has been domestic. But nevertheless, there is a stock of foreign exchange debt that has existed and pre-existed. And the servicing of that debt actually is an issue. And now the recent swaps and things that have come in place have created fiscal space. But this shows you the extent to which the global vulnerabilities are actually placing and impacting on the country. So when you look at that, and then you look at the fiscal deficit side, there has been, with a drop in the denominator, so it's debt to GDP, which Sri Lanka is high, but it's not the highest we've seen in the world. That's not the issue. But if you look at debt to GDP, that's increased as a result of the drop in the GDP, the considerable drop in the GDP. And we were hoping that that would go down as the economies recovered. But nevertheless, there is a vulnerability there. Now, if you look at debt to revenue, that's exceedingly high. So then the question becomes, on this issue of commodities, how they will act and how will they react? The question I would say for me is rather not how they will react, but what is the impact? What are the policies that we can do now to address these things as we move forward? Because the issue is creating fiscal space. And creating that space and creating space in a global market to allow you to address these things. So I think, we have to take it into account, and it's a balancing act that has always existed. But now in a COVID environment, this issue of balancing, moving forward and having policies and playing a balancing act between trying to keep the economy rolling and at the same time undertaking hard choices for macro fiscal policy and debt policy is exceptionally hard. And you know this more than anybody, Dr. Koum. So it's hard to judge and say one should do this and one should do that because one is trying to do a balancing act. The issue is identifying what the vulnerabilities are and what we can do to address them right now. And last but not least, what opportunity does COVID create for us to address structural issues so that we can build back better after this? I hope that answers your question.
Yes. No, thank you very much. If I've understood you correctly, I mean, I think, let me also tell a bit of a story by going backwards. At the time of independence in 1948, Sri Lanka was second to Japan in Asia on almost any socioeconomic indicator. We've clearly regressed. And one of the problems has been this structural twin deficit problem that the country has had. And as you've implied, part of it on the budgetary side has to do with revenue. Our revenue collection compared to our peers, I mean, we're at about 12% of GDP or less, when our peers are collecting 20% of GDP plus. Equally, our export performance. If you look at export as a percent of GDP amongst our sort of peer countries in Asia, it's twice, 3 times our number. So that is what we need to get out of, to get, on a sustained basis to move Sri Lanka out of the twin deficit basket, which is probably the most vulnerable basket of countries. These are the issues that we need to address. So taking that as the backdrop, in terms of the World Bank's program going forward, what are some of your priorities which would assist Sri Lanka in addressing some of these problems. Because I must tell you, as a Sri Lankan, I feel for the last 30, 40 years, what we've been very good at is kicking the can down the road. What we've been very bad at is actually grasping the nettle and doing the things that are necessary in terms of macro stability, in terms of structural reform. So in terms of the bank's priorities, and in terms of building back better, I guess there are three pillars people are talking about, right? They're talking about inclusive growth, they're talking about climate change and a green trajectory in the growth, and they're talking about digitalization. Those are three pillars. And I think the Sri Lankan government also is prioritizing those areas. And their whole theme of moving to a production economy is intended to kind of address some of these structural problems. So how is the World Bank kind of tailoring its program to support what the government is trying to do?
Mm-hmm. Yeah. So exactly right. I mean, I think I should just say in terms of process, you know, I'm sure you know this, but the World Bank's program is obviously, you know, is sort of embedded in what we call our country partnership framework. So our program, our own manifesto of support, if you will, is called the CPF, the country program, the country partnership framework. It's our strategy for 3, 4, 5 years. And it's really a strategy that links itself and aligns itself with the government and the sort of the government's overall approach, overall vision, and overall strategy. So we are now working with the government to actually develop the new strategy moving forward. And we hope all things being equal, we hope to have this finalized within a few months or up to a year. Let's see how the things go. So that's moving well. Now it aligns itself, as I said, to the pillars, and I think you've said it quite well, Dr. Pillay. It aligns itself to the pillars of the government, but we try to sort of create a nomenclature that captures it. And I think the best way to what we refer to is the best way to refer to it is we call it the grid agenda, which is green, resilient, and inclusive development. I think that in itself is perhaps a catch-all that captures everything: green, resilient, and inclusive development. Or you'll see, I'm sure you've already done so. You'll hear a lot about this in the global architecture now, the grid development. So we're in discussions with the government on that. I mean, there's several pillars to this. First one is relief, survival and relief. First strategy, and this is our number one priority now. As I said, we just approved, this is 81 million to support the financing of the vaccines and other equipment if needed, whether it's oxygenators, things of that sort, and that's available immediately. This follows another significant amount of money to help with the first phase, which is income support payments, other type of work, as well as financing the initial sort of supplies. This we had a project that happened last year quite quickly to help with financing supply, whether it's PPE kits, PCRs, and things of that sort. So the first priority remains that. In addition to that, we're addressing issues. So if we look at the relief and survival, that's the one. The second one is recovery. In recovery, we're actually looking at a number of areas, including our existing projects, to help kickstart the jobs agenda, to help kickstart economic recovery. This is through our private sector arm. The IFC is engaging quite a bit to make sure that there's liquidity for micro, small, and medium enterprises, tourism, and things of that sort. We are supporting in many areas in that regard, whether it's income support, whether it's things of that sort. So that's the second R, if you will. The third R is relief, recovery, and then let's say resilience or development. Resilient development. This is where we're now engaging in. We have a pipeline which is quite considerable, actually, and 19 projects, and we're doing more work now because we have to kickstart growth, and growth that is greener. So focusing on irrigation, helping with irrigation, more modern irrigation. We are also supporting the 100,000 kilometer program by trying to focus on connectivity of roads. We are very much in discussions with the government on the digital development agenda to see how a digital agenda can help on the recovery and resilience stage. So we're focusing on all of these as a matter of policy. And I was just in Sri Lanka last week, as you know, and we signed two agreements. One that's focusing on connectivity, because without connectivity, I mean, it's hard to talk about growth, which is the Kandy Multimodal Transport Project, and also something on water resource management and irrigation. So those are really software and hardware aspects of what we're doing. But if I may, I think you perhaps were asking a question on a more profound, and correct me if I'm wrong, profound basis on what we're doing in terms of the structural issues. And I have to tell you and really go on the record, I think what's fair is fair, to say that I really appreciate the quality and the depth of dialogue that we've been having with the government. I've been there for a couple of times, particularly during the COVID era, 2 times. And the meetings were extremely open, extremely transparent, and we are having discussions on a number of areas where we can support. Again, this has to be led by the government, elected government of the people, and we are there to support. I think all of these structural issues, we all read the same textbooks, we all went to the same schools, we all had the same experience, so we all know these things, and I think there's an awareness there. The idea is how we can help. I think we can help by supporting the growth agenda, by focusing on meeting the gaps in infrastructure financing and things of that sort. So I think this is what's important. Now, to answer, and please interrupt me if I'm going too long, Dr. Kuhn, but I just want to give you a full, complete answer to your question. I think the issue of the twin deficits, and if we're linked at the twin deficits to what the bank could be doing, I mean, it's a very it's a very important and very complex question, and I think that is basically goes to the heart of the matter. It's important to remember that these twin deficits, I mean, they're not new, as you said, you rightly said they've been around since the 1950s. Now, in the 70s, they took a turn in a certain direction. Then you had different phases of liberalization, and it depended what happened. Sometimes it didn't help. The short-term gains came at the expense of long-term gains. And we've seen that, particularly more recently, that we've seen that these high trade deficits were partially offset by rise in remittances. But recently, we also see an uptick in tourism playing a very important role, particularly after 2009. So this issue of a twin deficit is a long-standing issue. It's a long story that actually, I would argue, I know this is a very bad analogy in today's time, but has mutated over time, right? And we have different variants of it as we move forward. So it's important to look at these. But the structural issue that we need to worry about, rather than saying, what happened with the deficits, the fiscal and the current account, is looking at the nature of exports and that which Sri Lanka produces. I mean, I'm old enough to remember, and it's still well deserved. Please don't misunderstand. But the legendary, growing up, I grew up in different places. Part of it was in the Middle East. But, if you had textile, if you had a garment that said Sri Lanka on it, everybody's like, "Ooh, this is Sri Lankan textile." It's like having Russian caviar. And it was very, very important. But it's important to look at the history of this. Over time, as you know this, the exports of goods and services have gone down from 38% of GDP only 20 years ago to 23% of GDP recently. Imports have also dropped, of course. Garment export went down from 18% of GDP 20 years ago to 7%. Even tea, merchandise, and others have dropped. Now, if you look at the complexity of exports in the country, that's also shown a precipitous drop. About 10 years ago, a little over 10 years ago, high-tech exports were more or less 1.9% of manufacturing exports. A couple of years ago, they went down to 1%. Now let's take Vietnam in the same period, right? So we're talking Sri Lanka, 1.9 at T equals 0, and then 1% in 2018, 17, 18. Again, these data, these are, we cobbled them together. Don't take it. It may not be accurate. This is just back of the envelope, but just as an indicator. In Vietnam, it was 8.8 10 years ago. Now it's 41%. 41% high-tech composition of exports. And we've seen historically and empirically that there's a strong linkage between export quality, and imports. There's no sense talking about it. There's empirical evidence, data speaks, right? So I think this is really important as we move forward on the current account deficit. On the fiscal side, I think, there's a lot, if we look at debt, and I know that's dominating the press, and that's important and that's serious, and the composition of debt is very important. But I do believe that there have been sincere and very strong efforts by the government to be addressing these issues. These are not new to them, and very qualified senior officials are addressing issues. But then, if you look at, as I said, debt to GDP, I don't have the numbers with me here. Debt to GDP is high. It's gotten particularly high now because of COVID, because GDP has gone down as a denominator over 100, 109 or whatever that may be. But then if you look at debt to revenue, it's huge. And it's probably among the top, I don't know how many countries in the world. So that tells you something. Is there something in the revenue base, in the fiscal anchor, that can create space? That is problematic, but does that create space for the country to move forward? I think this is the issue. So I think in a summary, I would say that it's not easy to relieve ourselves of a twin deficit that is a legacy that is now 7 decades old in Sri Lanka. It's not easy, but the government, I do believe, we have been discussing, and they are trying to address it. But I think to fix these on the fiscal, one has to look at the revenue side. That's very important. You could talk about debt and interest payments and all this, but these are rigid issues, and there are international agreements, there are ratings, and there are things of that. I think it would not be responsible to impose that burden, which is hard to remove. But look at the revenue side. And on the current account, I would just say on trade, competitiveness, export orientation, import orientation for exports, the need to make Sri Lanka competitive. The world has changed inexorably, and Sri Lanka has historically held such a prestigious role. It's a shame to lose that. So I think we need to address competitiveness and export orientation, and trying to find what the bottlenecks are for the private sector to unleash those moving forward. Over to you, Dr. Khan.
Thank you. I must say, I very much agree with you on in terms of the twin deficit. On the revenue side, historically, from colonial times, the tax base was dominated by the taxes levied on our 3 export crops, particularly tea, but rubber and cocoa. But the surpluses in those sectors got squeezed, the tax available has got less, and we have not found a substitute. And the new sectors have enjoyed tax holidays. So this is the problem. And I think there was a strong case for tax holidays when there was a war, an internal conflict, and there was a war risk premium that had to be addressed, and we did that through tax concessions. But now that we have peace, I think we need to reconsider the tax concessions here. Because at that time, we needed to give those concessions to get projects over the hurdle rate. At the time of peace, whether we can give away as much tax, that's the question we need to ask, particularly when we have free health, we have free education. In Sri Lanka, we tend to want Scandinavian social services and a Hong Kong rate of tax. That doesn't kind of add up. So that's something we need to look at, as you say. And your point about the complexity of exports is crucial. That's where we have a challenge. In 1980, if you looked at the complexity of Thailand's exports with Sri Lanka's exports, it was no better. You match the complexity now, it's a 2 different worlds. So as you very correctly pointed out, the crucial. And I must tell you before, I think we've taken up now more than half an hour. I should give time to our colleagues who want to ask you questions. But I am not in the least bit surprised that you've had very high quality discussions with your interlocutors in the Sri Lankan system. We have had no difficulty in analyzing the problems and even identifying the solutions. The challenge has been implementation in a complex political landscape where economics consistently takes a second place to short-term political experience. So that is something, if we want to get out of this situation, I think that's something we need. It's foolish to think that you can separate economics from politics. You can't. But that balance between politics and economics needs to change if we are to make real headway in terms of addressing some of these challenges which we've had, as you pointed out, for decades. It's not new. The pandemic has amplified some of the problems, but these are underlying problems to be there for a long time. Okay, I've had my little rant, so let me now. I think we've got some people who put their hands up. Uh, how are we going to do that, Amira? Are we
Mr. Kure, you may pose your question now.
Yeah, thank you so much. Let me ask my question by thanking the organizers, Pathfinder Institute, for organizing this wonderful kind of panel discussion. My question is relating to World Bank forecast for the next year. I understand that the forecast figures are different. You know, the figures coming from the Central Bank of Sri Lanka and the figures coming from the World Bank are different. My question is, of course, it could be due to the assumption. You know, when you make forecasting, you know, different. We have to make different kind of assumption. So, what are the kind of underlying assumption that World Bank has made when you do forecasting for Sri Lanka next year economic growth in particular? Because when you assume, I don't know whether you are assuming that economy will continue as it is now, or pre kind of COVID situation. What are the basic assumption that World Bank is setting for forecasting?
Were you able to hear that, Faris?
Yes. No, thank you. Should I? I guess we'll answer one.
Yeah.
Okay. No problem. Thank you very much. Thank you for that question. I fear I will answer it. It's a very good question. I will answer it partially because I'm afraid our economists are not connected. I don't know what happened, but they're the ones who would be able to answer. But just to share with you, our estimates were, of course, that for 2020, that GDP actually, I know you were asking about forecast, but that the economy dropped by 3.6%.
We are connected, Faris.
3.6. And we're expecting our forecast for 2021 is 3.4%, and for 2022 is 2.0. So those are the forecasts for the World Bank. How those were done, I could tell you, and I'm sure you know this, they're very complex formulas which take a huge number of assumptions. We have actually been discussing with the central bank and with others our assumptions versus theirs. And I have to say, and I have to also go on the record in thanking them, because we had very important dialogue. In fact, I was there. I think it was my last day before I traveled. We had a meeting with the central bank and the honorable governor of the central bank, and we were going through these things. So there's a lot of areas where we had different assumptions. It's not unheard of for that to happen. In fact, if you look at our assumptions, we have different assumptions than our colleagues at the IMF. And I think that happens. So I'm afraid I can't give you one answer, but it's just a number of areas where it's just a formula itself yields different numbers. Having said that, I think what's really important on this, and I'm sure you'd agree, is whether, I mean, at the end of the day, we have an assumption. They have an assumption. ADB has an assumption, IMF has an assumption, et cetera. And then we have a reality that's somewhere in the middle. And then we all, our assumptions our forecasts are always very good the year after they happen, because then we agree the year after. So we all agree on what happened in 2020. I think what's really important is to look at the direction and to look at some of the vulnerabilities therein. Those are the two issues. The direction has been positive, but starting from a base, right? So starting from a low base, because remember, there was a plummet in GDP by minus 3.6%. I mean, if for South Asia as a whole, we talk about 2021. This is before the recent issue in India is projected to grow at 7.2%, which is huge. But keep in mind that the year before it went down by minus 5.4%. So I think that's one of the issues we need to look at what the trajectory is, and we look at the vulnerabilities. What are the things that are going to impact the GDP? And I think on those, I have to say, all of us agree, and the government is fully on board, and they agree on those. What are the vulnerabilities? And the vulnerabilities, as you know, comes from the issue of trade, comes the issue of the impact on businesses and things of that sort. We're deeply worried about the current crisis and what's happening in India and the lockdowns that are going to happen. And I truly pray that Sri Lanka will be spared from this. I have to say, and one has to give credit where credit is due. I was actually there in Sri Lanka during the first wave. I was there October, November, December, I think, and I saw the way the government responded to this issue was actually quite effective. So I'm hoping it will continue to be so. Over.
Okay, thank you, Faris. Have we got another question, Amira?
No, Dr. Kum.
Okay, then if I, may ask you, Faris, on the trade side, for now, last few decades, the most dynamic component of the international trading system has been kind of the supply chain, right? That intra-company trade. And one of the reasons why we in Sri Lanka have not been able to penetrate those supply chains is that, we've had all these non-tariff and tariff barriers, which meant, in the modern production cycles, there isn't much of a difference between exports and imports. You import something, you do your little bit, and you send it out. Now, if you put a tariff in the middle of that, of course, you become uncompetitive and you don't penetrate. Now, from your experience in Malaysia, etc., is this something that we really need to, if taking in the immediate term where we have to balance our inflows and outflows, there is a rationale for some trade restrictions. But if we are serious about increasing the complexity of our business, and we want to drive export with FDI, it seems to me that you have to be very conscious that you create the conditions to penetrate regional and global supply chain. Is that a reasonable statement to make?
Yeah. No. Thank you very much, Dr. Kum. I mean, I think this is a very good question, and it's a very very profound question. There's two answers, if I may. There's two parts of the answer on this. I mean, we all studied economics and so on. So from an empirical academic, from an academic and also from a real life perspective, in the sense that we have now significant data globally of experience to say this with a great degree of certainty. And that is exports is linked to imports. We know that. That is a hypothesis that's been proven. Quality of your exports is linked to your quality of imports, either directly through causality or through correlation. Through causality, the price, the competitiveness, the quality of imports leads to better exports. The correlation is that, usually situations where you have that level of imports that is somewhat unabated and unrestricted, is that usually comes with other aspects which show a private sector friendly, FDI friendly environment where the small ones can come in very easily. So that's on the correlations. So in reality, yes, and the evidence suggests that that is the case. Now, to be fair, again, and to be very pragmatic about it, in the real life case, it is very hard to make the case because, whereas it is true, I think there are many cases, and particularly we started seeing this now in the COVID, a little bit before COVID, the world has been moving in extent to some more trade restrictive environment. So many countries have actually started doing that. So I'm not suggesting that makes it necessarily a good thing to do, but it's a bit, one has to be symmetric and fair, and looking at other countries and exploring under what basis they have also put that. So I guess what I'm saying is that academically, actually theoretically and empirically it is true, but there are other factors beyond this that in some cases may make sense. And I don't know, I can't speak to that. I don't know enough about it. But unfortunately, in this world today, we see a lot of situations where these restrictions are coming. And it's one of these things where it takes two to tango, if you will, to do that. So no region, I think, in the world, or very few, are free from that story of some controls. And they have done it in the past, whether it's agricultural products, whether it's things of that sort, that's an issue. Having said that, let's put our hat on of what is the best for Sri Lanka in the long term. And again, there's a chronological aspect. things may be in the short term necessary to do, but in the long term and in terms of Sri Lanka's overall narrative, it goes without saying that the two go in lockstep. The world, as you said, is such a global place where it is so price sensitive and so quality sensitive. And forget this COVID era. Once we go back to some degree of normalcy, we will remind ourselves of how easy products and money flows from one country to the other if there's attractiveness and there's even one quantum of competition. And an ability of a firm to import products not only cheaply, but in an agile way, whether it's capital products and things of that sort, is very important. But again, I'm being very sort of on the one hand, on the other, because I have seen it applied in some cases across different regions. Over.
Okay, we've got Faris 3 questions. So shall we get the people to ask their questions, and maybe you can take them all together in the interest
Sure.
of time? We're beginning. So I've got the 3 questions. One is Professor Rohan Samarajiva, Patrick Van den Rijn, and S. Ratwata, that may be Suren Ratwata. So let me take each of them in turn. Professor Rohan Samarajiva. Rohan, you want to ask a question?
Yeah, thank you. It's a related question, which is you had a comparison of Sri Lanka and Vietnam in terms of diversification and complexity of exports, saying Sri Lanka had made no such progress than Vietnam had. Now, one of the things that I have noticed is that we have been very hesitant or even unable to move forward with trade agreements, bilateral or regional agreements, while Vietnam has been almost the world champion in entering into various kinds of trade agreements, including RCEP. And not only that, with the current government, there is a attempt to have import restrictions, and not just import restrictions, but then to do it through licensing, as evidenced most recently by this palm oil imports. So first what you do is the government says nobody is permitted, and then when it's pointed out that it's a necessary input for exports, it says, okay, only these 5 companies will get licenses and nobody else will. So in that context, what kind of policy recommendations should we be making if we are to talk about improving export performance? Thanks.
Okay, so that is trade agreements, and also whether licensing has a role to play in supporting export growth, licensing imports. So those 2 questions there. Okay, next, Patrick, you want to go ahead?
Yes, thank you very much, Doctor. My question would be in the context of the new normal, should the World Bank recalibrate its ease of doing business measurements? We are all referring to the ease of doing business tool as a measurement tool, but with this new world and new situation we are in, does it need to be revisited? That's my question. Thank you.
Thank you.
Okay, and finally, I don't know, is Esratwata Suren? Is that Suren online?
Yes, it is.
Hi, Suren.
Dr. Kumarasamy, good evening. Mr. Halad, a pleasure to listen to you. I want to just pull ourselves back 100 years or so ago and mention the effects that the 1918 flu pandemic had on Ceylon. I have not seen any mention of this in the Sri Lankan press, which I can't believe. Ceylon had a population of about 4.5 million and lost over 300,000 people to the flu. That was 6.7% of the population, and there's a recent US National Institute of Health paper that mentions this. Yet we seem to be taking very few precautions, and should even a fraction of those casualties occur, what do you think will be the effect on the economy.
Okay, if you want to, I think that's, there's one more. Amal Amevardhana. You want to ask that? I'll make that the last question because we're running out of time. Amal, please pose your question.
Yes, hello, and thank you very much for a very interesting conversation. I'm based in London in the UK, I think where Indrajit is also based actually. So given that the World Bank is a multilateral organization basically funded out of the West, and the West is pledging to help developing countries as much as possible, is there any attempt to consider debt write-off from the World Bank, please, to help Sri Lanka?
Okay, that's I think a good number of questions just to now pose collectively to you, and then maybe we'll wind up. Yeah, please go ahead.
Yeah, thanks very much. Indrajit, I think I need to ask for one easy question because they're all four very hard and good ones. No, thank you very much. And I promise I'll do my best to answer them, although with a qualifier that, I'm fully conscious of the fact that the people around this virtual panel are infinitely more aware, knowledgeable, and educated about the history and the economy of Sri Lanka. So I'm a bit humbled by that. I will do my best to do so, keeping in mind that I'm a voracious reader and a listener. I've been on, I joined actually the Sri Lanka program in July 1st of 2020. So bear with me if I don't have the wisdom there, but I can assure you that I've been reading and meeting with officials. On the issue, Rohani, of the trade agreements, I think, again, as somebody who's now, maybe, at the sake of sounding silly, maybe there's a Solomonic wisdom to this because I'm so new at this job and come on it fresh and looking. Doing all the research that I have, this issue is not necessarily new, right? So I think in terms of, the need, other countries have entered into trade agreement and have been outward oriented. I think that goes without saying. I fully agree with you. I cannot comment as to, the issue of what the current government is doing on that, not because I'm shying away from it, but because looking at the data, this is something that has happened for a while. So, from an economic perspective, I have to say, look, the data precedes, the specific time lapses you're referring to. So I think this is why there's a structural issue that we need to address. Even looking at, from the 50s, any avid student of Sri Lankan history, which I'm becoming, actually looks at this issue that even in that period, there were periods of inward orientation, particularly from 59 to 77, just as an example. So I think we have to look at it structurally and what is the issue, what is the problem there. I think in terms of the very clear low-hanging fruit, there are very easy things that happen. One can look at the nature of tariffs, basically the foreign investment environment, things of that sort. There's a lot of analysis, and I won't obviously take your time with this because I'm sure you know this better than me. There are a lot of fruit. If there's a will to do it, I think it can happen, but it will cause, it does cost something in terms of getting everybody's agreement to do it. So I think we need to do that. But I think looking at it from the perspective of 1 or 2 or 3 years or a particular administration would probably not be doing justice to a structural issue that exists, and we need to address it, even in terms of sentiment towards private sector, towards foreign investment in the country and things of that sort. So I hope I've answered that. To Patrick, in terms of ease of doing business, absolutely. It's alive in and of itself. It's a generalized process, the doing business. And I know, when we talk to a lot of our clients, they feel that it doesn't capture sort of Sri Lanka's story, it doesn't capture Maldives, it doesn't capture others. And that is true. It's tautologically true, and it must be so because it's a generalized thing that is intended to compare almost 150, I don't know what the numbers are, countries. So it has to sacrifice in its granularity. But in order to meet the needs, I think, yes, and the bank is looking at revising, energizing, and looking at the specific variables in view of the COVID environment. We are looking at that. Also, in terms of measuring progress, what has happened, and to the extent that people have done reforms during the COVID period, that's something that we're also looking at. So yes, I fully agree with you, but I would just give one caveat because I work through across a number of countries, and there are countries doing reforms. There are countries doing reforms Sri Lanka is doing reforms. And, we had a meeting recently with the State Minister of Finance. There are things that are happening. So it is possible to continue using the doing business even during this time. I think, this issue, if the lion is chasing you, now's the time to run faster. And I think, now's the time to do these reforms. On the last question on the sort of the precautions on, I think the question on whether the bank will be, so far the bank will be doing debt write-offs and things of that sort. So far we're doing, there's a global initiative, which is the G20 debt initiative. The World Bank is part of that, right? And there are different, there's the sort of the countries that are very much on the IDA countries, which are countries that are below a certain income threshold. They have been given a debt extension, debt service suspension, but not a write-off at this point. For other countries, no write-off has been given. And the reason for that, whereas it may seem callous initially, if you look at the mathematics behind it, and given that so much of a country's ranking system, rating system, access to financial markets are linked to these loans, it is actually extremely, extremely difficult. It's like expunging a small sort of pellet from a brain in the midst of neurons. So I think one has to deal with these very carefully, particularly in this difficult environment. This is an issue that the bank has been exploring, but the issue is write-offs in a period where countries, particularly such as Sri Lanka, is so linked to international financial markets, whether it's bank or elsewhere, is extremely difficult to do and may send signals to the market that actually we don't want to happen. So this is something that we have to tread carefully with. It's not as simple as just writing off something on this. But we continue to be in dialogue with the government to see how ways we can provide support. There are a lot of things in the works now, but at this point, no such thing. I mean, there's the G20 framework and others that are being addressed. I know that the IMF's recent enhancement of the SDRs, providing a little bit of breathing space, is a very welcome thing. Everything is connected. Everything is connected. So we want to make sure that in an effort to be helpful, we don't actually be harmful. Thank you.
Thank you very much, Faris. Before I wind up, I'm going to abuse my position as the moderator just to make a couple of points. One is on trade agreements. As Rohan implied, or Professor Samadhi implied, our natural competitors have already signed a number of trade agreements. And on top of that, now we have RCEP, the Regional Comprehensive Economic Partnership. We are well behind and falling further behind. So it's encouraging that the government has spoken about reviving some of the ongoing trade negotiations. So we need to move ahead decisively, I think, in making sure that we make up the lost ground. The final point I'd like to make is that, one of the lessons that the East and Southeast Asians learned from the Asian financial crisis is the importance of having buffers in your economy. They built up insurance through running large external reserves. They created fiscal space. In our case, we tend to live on the edge. So when there is a crisis, it's very difficult to respond because there is a challenge in terms of fiscal space, there's a challenge in terms of external reserves, and then sometimes we are forced to settle for a much lower equilibrium than need be if we had some space. So I think going forward, when we're going to build back better, we identified certain preferences. But for Sri Lanka specifically, one needs to add another one, which is that we should work at building buffers. And this point is illustrated very vividly. The area where the economy had some buffers was in the banking system. I must thank my former colleagues in the central bank working in this area who pressed ahead with Basel III and IFRS 9 and created buffers in the banking system, which has meant that the banking system has been able to do the heavy lifting. Along with the central bank, the banking system has done the heavy lifting because there were buffers. It just shows you that if you have buffers, then you can make the system more resilient. You can respond to shocks. And we need to build buffers right across the economy. And that's something we have not done in the past. I think we should add that onto the list of things that we need to do in terms of building buffers. Now, let me, with that, thank Faris. He is, thank you. It's been really excellent, Faris. Thank you very much for sharing a tremendous amount of analytical insights, information. It's been a great pleasure to have had this conversation with you. I must thank all the other participants, those who joined us, as well as those who posed questions. And I must thank also Amira Aruz from the Pathfinder Foundation, who put all of this together. So thank you to all of you. Thank you very much, Faris, and stay safe. Thank you.
Thank you, Dr. Kum. I appreciate it. And I want to also thank all the other colleagues who joined. And I want to particularly thank, insofar as I sounded a little bit smart today, it's because of the quality of our economist team. I didn't realize they were connected, but they're connected. And if you have any questions, I'm happy to relay it to them. They're the brains behind the operation. So, so happy to do so. Thank you very much to everyone, and stay safe, please.
Thank you. Thank you to everybody.
Thank you. Bye-bye.